Hi, everyone. I'm Dr. Sharifa Al your neighborhood clinic. And today we have with us Don Chestnut, who is a financial planner located here in Washington, D.C. Don, tell us a little bit about yourself and your company.
Okay. So again, my name is Dawn Mabry Chestnut, and my name of my firm is Mabry Consulting. And like Sharifa said, I'm sorry, I'm on the
Yeah,
phone.
you can call me
Is it fine to
Sharifa.
call you Sharifa?
Yes, it is.
Um, my business is located here in Washington, D.C., and I am a financial planner and an investment advisor. And simply put, I help individuals make informed, intelligent, strategic decisions about how to manage their money.
That sounds awesome, Don. And I'm so excited to have you today. We are talking to K through 12 educators around sort of how finances and how managing finances can help reduce stress and improve overall wellness. So I just want to talk to you sort of broadly, start off this conversation regarding how do you think money impacts our mental health and our overall wellness?
Well, you have to say this, money matters. It's not everything, it's not the end all be all, but it does matter in certain circumstances. So, when you have enough of it and you're financially stable and secure, you're not stressed out, you're calm. But when you're struggling financially, it can lead to, anxiety, depression, stress, and really extreme, even more extreme circumstances, suicide. So, dealing with self-care is really important, especially when it comes to your finances, not allowing whatever your financial state to be to really consume you, but really making sure that in addition to whatever financial struggles you might be dealing with, making sure you're dealing with your self-care. Now, money does not guarantee happiness. But regardless of whatever your financial situation is, always put your self-care first.
Mhm. So, I mean, it's definitely a good idea to use self-care as a way to manage financial stress. One of the things that I like to talk about when I talk about self-care is sort of proactive self-care,
Mm-hmm.
right? And so, with that, I think being proactive in terms of our finances is also a form of self-care, right?
Right.
So, starting with from there, what do you think are just some good proactive financial money management strategies that you think individuals should incorporate?
Um, it really starts with the basics. A lot of people ask me, what is the, key to, proper financial management? And I think a lot of times, I think they are looking for something that is like some magic bullet, something that is earth shattering, and it's really not. It's really just good old basic foundational money management. And I get why the question is asked so often and why, more people probably aren't as good at managing their finances is because it was never taught to us K through 12
Mhm.
in most schools. At least my growing up, I never was taught anything about money management. But in terms of tips and just some basic things that people can do, you kind of start out with, goals. Your goals are, what do I want to do? And it doesn't have to be anything formal. It doesn't have to be written. It can be just be stated. If you've ever said, I want, I wish, that's a goal. It's not anything more complicated than that. And then once you have those goals can help to sort of, keep you laser focused on, okay, I know I want to do this, so I got to make sure my money does this, and I need to manage my money properly to make sure I can do whatever it is I wish or I want to do. So after that, once you have your goals, just setting up a proper budget. And with a budget, one of the key things you need to make sure you're doing is that you are differentiating what is an essential expense is and what is a lifestyle expense. And what I mean by that, essential, what is those things that are needs, the things that you need to survive. So That's everything from your housing expenses to groceries. And if you lose your job, the credit card company wants their money to pay the credit card bill too. So those types of expenses. And then when it comes to lifestyle choices or lifestyle expenses, those are the things that are certainly great and make life more enjoyable. But if we had to do without them for a little bit, then just making sure we are being honest and truthful with ourselves when we're setting up this budget, and making sure we're putting those expenses in the right categories: essential and then lifestyle choices. Managing debt, making sure you have your emergency fund. People often ignore that. And the rule of thumb around that is, if you're in a two-income household, you should have about 3 months of living expenses in an emergency fund. And if you're a single income household, it's about 6 months of emergency expenses that we should have. And we all got a glimpse of why that might be important when quarantine hit. No one knew how long we were going to be out of work, but it ended up being a whole lot longer than 3 and 6 months. So just making sure you have something to fall back on when tough times hit. And, not over, living above your means. A lot of us are making impulse purchases because we haven't originally set up goals and set up a budget. Anything that comes up that sounds exciting, we are saying yes to, and not really looking into how is that going to impact our finances. So those are just a few things that come off the top of my head.
Well, we don't have to unpack because I'm sitting here stuck on lifestyles and essentials.
Yes.
So, I'm like, Now, okay, so because I don't want to be too transparent, but there are some things, right, in my essential category
Uh-huh.
that others might think are lifestyle categories. So, is like, for instance, beauty hygiene, right? Like nails, hair,
Mm-hmm.
you know.
Mm-hmm.
Um, so is it okay if those, like, if I'm setting a goal just to reduce the amount, or
Uh-huh.
is it that I do need to be firm and say these are lifestyle as opposed to essentials? Like, how would you suggest people sort of manage what may be in those gray areas?
So let me preface what I'm about to say with this. So, what one answer is, so I'm in the business of giving tailored, customized financial advice that fits each client's unique circumstances.
Mhm.
So, what answer I might give to you about what should be in your essential and, lifestyle categories may differ from someone else's lifestyle in essentials category. And as an example, so say that monthly massage is really like part of your, and we talked about this earlier, self-care regimen. If
Mhm.
that is really what you need to decompress at the end of a month or whatever the case may be, that is your determination on where that falls in your budget. And as long as you are being truthful with yourself, then that falls wherever you want it to fall. So, and I'll give, and without me, I'll give a little transparency as well. Like, I have a car. I have worked from home for the last more than 10 years, over 10 years that I've had my business. I've worked from home. Do I need a car?
Mm.
No, I don't need a car to get back and forth to work. It's not helping me. It is not, something essential that is required for me to make money and for me to live comfortably. No, right now, because of my lifestyle, a car for me is a luxury. But that would be a completely different answer for someone who needs their car and there's no public transportation 30, 45 minutes away from their home to get to their car, to their
Yeah.
job.
So they do. So I hear you saying that people need to be honest, and people need to also be clear with themselves as to what is going to be more luxury slash lifestyle versus essential, and
Exactly.
that. and that they are also, I also hear sort of that they have to sort of prioritize, right? Like it's not going to be we're going to meet all of our financial goals
Right?
at one time.
Exactly. Yep. Nope. Finances are not something that stays the same throughout our entire life period. Everything changes. The amount of money we make changes. We can get raises. We can lose jobs. Um, our lifestyle changes. We may have kids, that we didn't have, 2 or 3 years ago. So everything about life changes. So yes, money, decisions are ever evolving, and so your goals, and it involves constant reevaluation and adjusting. So don't just set a budget and never look at it again. That should be looked at, however often you feel is appropriate, but at the very least, once a year, if drastic changes aren't happening or expected to happen in your life within a 12-month span.
That's interesting because the husband and I, we decided, I would say about during in COVID, so I guess about 3 years ago, to start having monthly financial meetings.
Hmm.
And I feel
I'm
like
glad to hear that. Yay.
and and that has tremendously, I think, changed our financial outlook as well as the amount of stress that we experience as a couple around finances.
Hmm.
So it's interesting that you said look at it annually at the bare
I said
minimum,
right, at
at least
least.
at the bare
Right,
minimum.
right.
But what do you think is like a healthy time to like evaluate and reassess your budget? Like honestly, what do you think people should be doing?
I think it depends. So, I mean, in my practice, I meet with my financial planning clients quarterly. So, if I had to pick a number, I would pick that. But really, it just depends on how frequently things are changing. Big financial things are changing in your life, and your comfort level. Of how often you want to meet, and that you and your partner, your husband, your wife, feel is necessary. But like I said, you hear lawyers say, before they answer a question, they always say it depends. When you're talking about financial advice and managing money, it all depends on the unique circumstances of the individual. So I
Mm.
wouldn't give a strict time frame on any particular person. I would say it really does depend on your circumstances.
Okay. Now, how do you stick to your budget? Because, we make a budget and I will say, I'm only going to spend this amount of money. I'll say my most fluctuating budget category is eating out food, right? Like
Uh-huh.
I do very well with my grocery budget, but sometimes I'm tired. The kids don't want what I made for dinner. So my most fluctuating, most fluid budget category is how much money I spend eating out of the house.
Mm-hmm.
So how do we stick to it? Like what tricks do you have for people who are just constant sort of budget spenders or over exceed that budget category?
Well, I don't like that word trick. So the first thing you have to do is be realistic. And how can you go about being realistic? So, one of the things you can do if you're putting your budget together is to look at the last few months. What did I spend in these categories? What did I spend on my eating out budget? And if that is not what you put in your budget projection you're working on right now, then you need to get a little bit more realistic and say, I try to stick to, this smaller amount, but realistically, it's this bigger amount. So you come up with something in between, maybe, but really just trying to be as realistic as possible. And, don't try to make grand gestures in movements, because guess what? We didn't develop these bad money habits overnight, so we're not going to fix them overnight either. So take baby steps. So don't just say I can't eat out at all, or whatever the case may be. That's not realistic. But do something small. Average the last 3 months and say, okay, we're going to go with that. Move forward and try to stick with that and see how it goes. It's all testing. So just because it didn't work 1 month, you can review it the next month. If it's really making you feel uncomfortable, really busting up your budget, review it the next month and say, okay, I need to look at this and think about this a different way, and really, come up with another number. So just being realistic, reviewing regularly, making adjustments as necessary, not being hard on yourself, because we're not striving for perfection here. We're just striving for progress. So no one's perfect. We're not going to get it to be perfect, but we do want to see that we are getting better and making progress and taking small chunks, not trying to make really, really grand gestures with our finances that just we're not going to stick to.
Yeah. Well, I think that leads us to our next question around what are some common mistakes you see people make with their money that increases their stress?
I mean, it's really the flip side of the tips. So, what I would add new to the tips are, well, I talked about goals. So people underestimate, or they might think doing goals is corny, or whatever the case, whatever the situation may be, but really putting in the work. They think there's a quick trick that you can do, or a light that you can turn on. And we live in a society where we want things fast. We think there's a quick fix to everything, and it's just not that when it comes to getting your finances in a place that you would want them to be. So it's putting in the work, doing the basic stuff. So making sure you having goals, having high interest credit card debt. So 20% or more, I see it so regularly, having that high interest credit card debt. And the only other new thing I would add is ignoring retirement planning,
Mhm.
ignoring the importance of an emergency savings account, just ignoring those things and putting them off and not dealing with them. You might not be able to put large amounts into your savings account or large amounts into, your retirement account like you want to right now, but that stuff grows. It's growing with interest, compound interest. So whatever little bit you can do it, because it's gonna, make a difference in the long run.
Yeah, I remember I was in college and they had a financial workshop um in the dorm, and the lady had put pennies around the room.
Hmm.
And so she said, oh, there were five pennies that were around the room. Did anybody pick up any pennies when they came in? And three people raised their hand, and there was still two on the ground. And she gave those people that picked the pennies up prizes
Yeah.
because she said, like, the first lesson was like, when we're talking about money and when we're talking about reducing debt and talking about increasing money, every penny counts.
Right.
And that has stuck with me my entire life. Like, since then, I've been like, even if it's like I am only gonna put aside $10, like it used to be that we're like $10 isn't anything. What is $10 gonna do? But that $10 is some of my worst days has been like, oh, I'm so glad I got this $10 because I can go to the grocery store or whatever.
Right.
So
Right.
I think, like you said, like really paying attention and making sure that we aren't ignoring those savings, ignoring those retirements. And then I would just add, like you, that it all adds up, even those
Yes.
pennies or dimes or $2, $3 here, it really does add up to where we want to go.
That's right.
Um,
Save early and often. That's the part. If that month those pennies are in a investment account, typically it's growing and your interest is earning interest. And one of the things we can't get back is time. So if you're neglecting putting money in your retirement account in your 20s, that could have grown by retirement, depending on, that could have grown so many times over by the time you retire. And if you wait until you're like mid 40s and retire, you would have like 1/10 probably of what you would have if you had started saving early and saved often, no matter the amount, because time and compound interest, they are our friend, and we can't get those two things back.
Are there any, I'm just gonna throw this out you. I know we ain't exes, but are there any high interest savings account, or where should people look to find high interest savings accounts? Like,
So you could do research on the internet, and when I do searches like that, Bankrate always comes up, bankrate.com. They'll give you a list of currently what are the banks with high interest rates. And so that's a good starting point. Some of them will be online banks, some of them will be brick and mortar banks, but that's a good starting rate, bankrate.com.
okay,
I know American Express, Marcus, all of them have Capital One. They're just out there, but to see what is available when you are currently ready to look, um, do an internet search, and I'm sure bankrate.com will come up in your search.
okay. And so, how do you think people can use their employee benefits to also help reduce their financial stress?
Number one, just know what is in your employee benefits packet. I get so many clients and they have never looked at the employee benefits package. They know the big things. They know, retirement or whatever the case may be, but they don't know the nitty-gritty details. I myself just discovered with my health insurance plan, they have access to a free health coach. And also, one of my friends has this health app that she's using called Noom. And with my health insurance, it gives you free access to that app. And she's paying for it. I was like, you might want to check your health benefits because that might be a benefit with your health plans. But there are so many nuggets in there. Another thing I see, people don't take advantage of, there might be an automatic amount of life insurance or disability insurance your employer may give you. But if you need more, there is a supplemental plan that you can buy, you can pay and have that additional, coverage if you need it. And a lot of people don't take advantage of that, and they don't do the math to see, do I need more? And the reason why that's so important, because if you do need more, you can get it at a much lower reduced rate that your group plan has negotiated. If you try to go out and get an individual plan in the regular market on disability, it is going to be like almost cost prohibitive depending on how much you're trying to get and what you're trying to cover, to get it. So look at those plans, see what they're giving you automatically. Yes, opt into those things, but also see what the supplemental plans are. See if you need additional coverage, and then buy them, because you're not going to get them cheaper anyplace else. HSA, FSA, all of that good stuff. People are usually familiar with that. And there are student loans. It's a big topic right now because everyone's going to be resuming student loan payments next month. And sometimes some employers will have some type of repayment, student loan repayment assistance. But guess what? You won't know it unless you read your employee handbook.
Well, this is directed for K through 12 educators. So I will add
Hmm.
this to you all. You all definitely qualify for public service loan forgiveness. So you definitely want to make sure that your student loans are housed under Mohela, which is the current um, loan provider that oversees the public service loan forgiveness plan.
Hmm. Hmm.
So if you have a government issue loan, a federal loan, you want to make sure that that is housed under Mohela and that you are in the public service loan forgiveness plan and in the most lenient income based um
Repayment
plan
plan,
as
yes.
possible,
And
repayment plan as possible.
And the federal government just came up with a new income-based repayment program called, the acronym is SAVE. I can't remember exactly what it stands
Mhm.
for, but the acronym is SAVE. So there's another option for you to consider when it comes to the federal government income-based repayment programs.
Mhm.
But yes, there are, if you have federal student loans, yes, there are programs and different things you can look into, not to be confused with what I was talking about. Your actual employer may have a separate, outside of the federal government program, a student loan repayment program.
Mhm. Yes. So meet with a benefits counselor.
That's
Like
right.
I hear you say, go ahead and schedule a meeting. call in the HR on one of
Yep.
your breaks, and
Let me
set up a
add
meeting.
this. Can I add this? More
Hmm.
and more employers are bringing on folks like me in providing as a free or very reduced price as part of the employee benefits package, bringing on financial planners, investment advisors for you to talk to as well. So make sure you're reading through that packet and seeing all that may be applicable to you, because you may be able to talk to a financial advisor for free.
Hmm. I would also add, I know one mistake that I made
Mm-hmm.
when, because I think they did the same thing for me at Howard. So I met with the guy, and the guy looked at me, and I looked at him, and he was like, "Why are you not contributing to get matched, to get full match?"
Oh my
Like,
God. I'm so glad you brought that up. Oh my goodness. That is one of my, I love talking about this topic, but you go ahead. If I need to add,
well,
I'll add.
well, that was exactly his response. Like, he sat down and showed about my paper. He was like, "Why are you not fully contributing to get full match?" And I was like, "Well, what do you mean?" And he was like, "If you contribute up just 3%, they will match it. Like, at that time, they was matching it to 5%, right?
Uh-huh.
So if I contribute 3, they would contribute up to 5."
Oh
And
my
so I
goodness.
and I was like, "Well, I just want to contribute too." He was like, "Ma'am, no." He was like, "So I would contribute 2, and they were only contributing 2, an additional 2. But if I went to 3, they would contribute 5." And he was like, "You're losing so much interest and so much money on your retirement. Like, why are you not doing it?" And so
And
I
I'm
just,
glad he told you that.
yeah.
I'm glad I told you that. And the only thing I would just add is that that is free money. That's free money that you are leaving on the table that will sit in your retirement account and do nothing but compound if you were to go ahead and give the 3% so they could give you the 5. And so you end up with 8. How do you leave 5 on the table?
In my mind, I was looking at the wrong goal. Like, I was in my mind, I was like, well, I thought I needed more money in the immediacy,
Mm,
and he was like, "You actually don't." He was like, it would only cost you about $150 a month to, go up to 3%, but he was like, you would gain almost double that to
right,
go into your retirement fund.
right.
And so I think sometimes when you go, for me, right, like, I can be transparent. I was a single mom, scrounging to get by to, like, fully employed,
Mm-hmm.
with a salary job. My mindset was still of scarcity. Like, I needed money in hand, as opposed to being more future oriented in terms of, I really don't want to work forever,
Right,
and
right.
it took a little shift to be like, you're still thinking like you are a graduate student single mother, as opposed to uh full professor, not a full professor. I wasn't, but a professor that has a salary job now.
Right.
Uh, so yeah.
Yeah, so sometimes we don't know what we don't know, you know? And that's understandable because, like I said, it wasn't taught K through 12 to any of us. So, yes, get educated, do your DIY, but DIY can only take you so far. So, if you feel like you have moved on to the next phase and feel like, okay, I've brought myself as far as I can come, DIY and trying to understand what's going on, and I need more help, you know, seek professional advice so that you are not in the dark.
Yes. So with that, tell the people how they can get in contact with you if they want to include you in their professional repertoire, people that help them.
Well, you can find me at mabryconsulting.com. That is my website. I am on Instagram, Facebook. Um, what's the other thing? LinkedIn. I have a YouTube channel. I do video blogs like this as well. And so you can go to all the social media channels and find me, but mabryconsulting.com. That's Mabery consulting.com.
All right. Well, thank you so much for talking to us today, Don. And I wish you a pleasant rest of the week. I know it's hot. We're in the middle of a heat wave again. So so thank you so much for taking time out today to talk to myself and our viewers.
Well, no problem. Thank you for having me. I certainly appreciate it.
All right. Thank you.
All right.
All right.